Gary Schlossberg is joining us, global strategist at Wells Fargo Investment Institute. Gary, good to have you with us here back on the program. Thank you very much. You know, markets everywhere have gone very, very quiet. Actually, I was looking at the CBOE Wix, which has fallen almost 13.5% in the last 5 sessions. It's at a new 52-week low. So it's kind of telling us that a period of calm lies in front of us. There are other ways to interpret this as well, as a contrarian signal, etc. But how are you looking at things from a market macro standpoint?
Well, I think from a fundamental standpoint, there may be some uneasiness beneath the surface. It's clear that the Federal Reserve will be raising interest rates at least one more time on May 3rd. Out beyond that, it will be data dependent. But what we're seeing from the data is still mixed, and that's pretty typical at the peak of an economic cycle. Pretty mixed, but beginning to tilt more toward weakness. As you just heard, the Beige Book survey showed the economy pretty much moving sideways. We know that manufacturing is in a recession already. Housing beginning to roll over in response to the latest backup in mortgage rates. We're seeing that in weekly data that we monitor. Services are holding up well, employment holding up well, but even there are signs of softening around the edges. And of course, all this against the backdrop of tightening credit. The positive spin there is that perhaps it's doing some of the Fed's work for it. As credit tightens, that creates a headwind. But for now, at least, a very difficult combination for the stock market, even as it moves sideways.
So what do you see as the way forward, Gary, as we head into what could be a global recession, a recession in the U.S. markets as well? Do you think that the equity markets could take a backseat, other asset classes could move center stage? And what is the asset, what is the asset allocation strategy for the rest of 2023?
Well, I think for a time, at least, it's going to be defensive. We continue to focus on the high quality, highly liquid stocks in the U.S. market. By sector, we continue to focus on the more defensive sectors, healthcare, energy to some extent because of the positive fundamentals there. We are preparing for a move into more economically oriented stocks, but we think it's really too early to make that move. For now, at least, as we enter a recession, the play in the stock market is to focus on these defensive sectors. In the bond market, very short-term securities benefiting from those increases in short-term rates. We think we're close to a peak in long-term rates, so we would barbell our portfolios, but stay away from the intermediate sector.
Hi, Gary. Good morning. Gary, we started off 2023. That's the Indian markets underperforming what the globe was doing. But I think when you joined us last as well, you spoke about towards the end of this year, India can start outperforming, even the US markets probably. Do you hold on to that? And what's your view on the Indian markets from here on?
Well, I think the Indian markets have the benefit of inflation, the Reserve Bank moving to the sidelines, at least temporarily. And if inflation can stay within their target band, that really works in favor of India at a time when interest rates continue to move up, certainly in the developed country space. We think the domestic economy, as inflation has moved down a bit, will benefit from that, has been benefiting from it. We see India as a growth leader in the global economy. We think between India and China, we will see a cushioning effect from that global slowdown that continues to be focused or led by developed countries. And along with that, we think that the Indian market, the Nifty and other stocks in India are pretty well positioned for that kind of environment. And then, of course, as global interest rates come off, which we think may happen by early next year, certainly in the U.S. and perhaps some other areas, that should provide additional support to the Indian market.
All right, Gary, we'll leave it there for now. Thank you very much for your time. It's always a pleasure speaking with you here on CNBC-TV18. Have you back soon again.